Well, Bajaj Finance reported an inline set of Q4 Q1FY21. The reported NII was pretty much in line with the 18-hour poll, and so was the profit figure. The company's profit after tax witnessed a degrowth of around 19%, and this was mainly on account of the kind of macro uncertainties that the business is seeing, and of course the provisioning, the higher provisioning that the company undertook. In fact, for Q1, the provisions were up by about 3 times compared to what it was in the last year. And given the fact that in the previous quarter also the company had taken accelerated provisions, the provisions are down by about 14% on a sequential basis. Nevertheless, the company remained conservative in their stance as far as provisioning is concerned. They made additional contingency provisions of about 1450 crore rupees for COVID-19, and the overall contingency provisions for COVID-19 now stand at about 10.8% of the consolidated moratorium book. Well, as far as the asset quality is concerned, pretty much steady asset quality. The gross absolute GNPAs were down by about 18% on a sequential basis, and in fact they were not in much surprises as far as the asset quality is concerned. The other positive thing was, as updated in Q1 FY21 operational performance, the company's AUM under moratorium was down to about 15.7% versus 27% in April. So this definitely reflects that the company is seeing better collection efficiencies. They reversed 220 crore of interest income from interest capitalized during moratorium. So definitely, as far as the moratorium book is concerned, they are seeing the moratorium number of customers starting to paying. This is a positive trend. As far as liquidity is concerned, they still pretty much remain well capitalized and well liquidated. In fact, the company additionally mentioned that 85% of the company's business is operational for usual business and also collections. 75% or more cities should revert to pre-COVID volumes by October. So this definitely tells that the company is slightly getting in a positive frame of mind going forward. Bounce rate and collections of 1.7 million new loans disbursed were pretty much in line or marginally better than pre-COVID levels. And the company said that if these metrics continue, they'll be comfortable taking a strong growth stance in second half. The company in the last quarter mentioned that they'll be focusing on preferring existing to Bajaj consumers versus new to Bajaj, and hence the existing customers contributed to 70% of the new loans booked during Q1. Additionally, in their investor presentation, the company mentioned that Q1 was a pandemic quarter. The focus was on capital preservation, liquidity management, business scenario planning, opex management, collection efficiency, augmentation, and most importantly, calibrated restart of business as the country restarted to open. So an inline set of quarter, the company's focus still remains pretty much maintaining liquidity, strengthening their balance sheet, managing operating expenses, but there was no negative or dramatic surprise as far as asset quality is concerned. So let's see, I'm hoping for a better quarter for the upcoming quarters, and the company is hopeful of a revival.